Hey everybody, this is Jose Blasco here. We are about to start. 30 seconds to go. Let's use this time for a sound check. So please go ahead. If you hear my voice, that means everything is good, but please let me know with a quick message on the chat box so I know everything is good and therefore we are ready to start. Wonderful. Thank you so much, everyone. Nice to see you all connected in the chat box and ready to begin. We got 3 seconds to go. That's it. We just reached the top of the hour. So let me maximize our introduction slide so we can have a proper beginning of a proper introduction and start for the session. Okay. How are you, everyone? Nice to see you all. Welcome to the session today. Today is the second session of the year, 7th of January 2020. First longer term get together session. So today we're going to be looking at the markets from that angle. We're not going to be looking at intraday opportunities. We're going to be looking at opportunities to exploit market movements of a little bit of a longer duration, but also exploit the markets from a non-directional point of view through the use of options. Where normally we would sell options with 1 week, 2 weeks, 3 weeks to go, something like that, and then we would just let time pass and collect premium and let that premium to decay up to a point where options became worthless. Okay, so the idea is to make money both directionally or non-directionally and do it in a way where all our trades are going to be lasting at least for a few days, and hence the name of the session today, longer term session get together. Okay. My name is Jose Blasco. I'm not sure I said it, but my pleasure to be your guide in today's session and any other session. Of course, always a pleasure to be here. And before we start, as always, we need to go over a quick disclaimer. So I'll read this quickly and we begin. The following videos, clips, demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. A user, you understand and agree that hypothetical results obtained through demonstration do not indicate in any way the results you may receive on using our products. And this is the disclaimer. If you are part of the sessions on a regular basis, you have seen that before, isn't it? And this is TradeStation, which is our bread and butter, TradeStation TradingView. It's our bread and butter with the AutoUFOs, with the AutoClimate, with the scanner, with all the tools that we use, always using technology, of course, to make us more mechanical, to make us more objective when assessing opportunities, to save plenty of time for us, and long story short, to do a better job trading, like you would do in all professions. You use the right tools. So talking about tools, since we're going to be exploiting a collection of different opportunities today, opportunities to the long side, opportunities to the short side, that's directional, but also opportunities which are non-directional. So what I'm going to do is I'm going to start looking at the scanner, okay, looking at the scanner, which is going to be the tool where we're going to basically obtain in a pretty automated way a list of symbols where certain criteria is already aligned for us thanks to the scanning process, meaning that instead of charting one symbol at a time out of a market, the US market has 9,000 stocks, more or less. So instead of having to go through all those symbols one at a time, basically the scanner is telling us here directional, D for directional, D for debit, okay, and you can see the up arrow. So here the scanner is telling us that we got 3 potential opportunities to plan trades to make money with a move to the upside. We also have to the short side directional down, so we can see the arrow pointing down. We got 3 opportunities to make money as the market falls, so we'll exploit that as well. And then we'll start with ND, which stands for non-directional trades. These are pure non-directional trades. What we normally do 99.99% of the times is we would plan around condors, isn't it? But also, we can sometimes we deviate from that and we look at neutral long, neutral short, where we do credit spreads. But of course, credit spreads normally pay half of what an iron condor would pay. Again, I'm simplifying it a little bit by saying half is not exactly like that, but you got my point. And normally we get paid double if I keep with that simplification. We get paid double using the iron condors, and therefore I will start the session as always looking at non-directional trades, and from there we'll move into directional. And then if everything was to not to return any opportunity, which sometimes could happen because sometimes the market is positioned in a way where it does provide high probability opportunities that are tradable for us, then we take them. But sometimes the markets will not. And when that's the case, then I will have my plan B, which is to look at neutral long, neutral short, which are trades that normally pay a little less, but it's still fair for us to execute those trades. But I will keep them as plan B, since purely directional and purely non-directional normally would pay better as long as your assessment of the chart and the market is correct. Okay, so we're gonna start with that today. Again, quick look here at the chat box. Very nice to see you all. Prakakara, very excited to meet you in person over the next weekend, isn't it? We're gonna get together in London, so very very excited for that. And nice to see you here as well. Edward, nice to see you, everyone. Dirk, Thui, everybody. Let me see. Jiwak, Jose, I'm a new member of the UFO trading group. Getting my feet wet since the past couple of weeks. Very nice. Nice to see you. And certainly, these initial sessions of the year are key. Putting on the side what we do every time somehow is an important time of the year. I know a collection of you are looking at 2020 as the year when you're going to go live, or the year where you're going to start looking at trading as a business. So again, certainly make sure that you connect with us and you kind of use the momentum of the group, okay, to help you in setting your own goals and getting started. Okay, Maria, how are you? Good to see you, Maria. Good morning as well to you, and happy new year. Yeah, you are in London as well, Maria, isn't it? If I'm not mistaken. Ray, how are you, Ray, my friend? Bojan, everyone, wonderful guys. Okay, so hopefully I didn't miss any message on the chat box, but again, it's such a pleasure, such fun for me to run these sessions and really special times. So anyway, but let's begin. There is money to be made, isn't it? So let's begin. Let's begin with looking at the list that we have here. Again, we have 13 stocks that were the results out of our non-directional filtering process. And of course, we can start from top to bottom if we wish, but normally what I would do is always start with the stocks that are like $100+ per share. Normally that's where I start, okay? And we talked about the reasons for that. So I'll start with Expedia, okay? I'll start with Expedia here. Of course, the higher the price of the stock, the more premium you get when you sell options. There are other aspects that imply that impact the value of options, okay, like big time, and we did talk about all of this in depth in our get-together sharpening sessions. But certainly, it's a good beginning to start with stocks that are not like, let's say, $20 a share or something like that, because that would be a little bit of a waste of time. Okay, so when looking at Expedia, if we were to load that chart, we do have multiple UFOs above and below, so that's okay. We got 48% when looking at regular session data. That is not a statistic that is that brilliant. But again, for non-directional trading, we take 48% or above, isn't it? In any case, I want to give myself a chance looking at pre and post market to see if the statistics improve, but in this case, it's not improved, it's worsened. So therefore, for that stock, we're going to be relying on regular session data. Okay, regular session here, you can see the check mark. Okay, so what do we do when we get to this point? Where the moment we got to this point, we now launch Option Station Pro, which is our tool for options analysis, where we're gonna get to see real-time pricing of the options, etc., etc. Okay, a few more questions there. Oh, Maria, so yes, so there is another trader in London who also share both your name and your last name. So in that was the reason for my question, Maria. Well, I love New Jersey, and nice to hear you're moving to Spain next year. Where in Spain? If you don't mind me to be a little nosy there. Jiwak, how would you use the autoclimber radar screen in conjunction with the scanner results? Well, you're going to see me do it today, Jiwak. You're going to see me do it. Mark Johnson, curious, what time did you run the scans? I ran the scans maybe, let's say, a couple of hours ago, something like that. That was the time. So, okay, so we got the Option Station Pro. Okay, we were looking at Expedia, so I'm just going to type Expedia. The whole option chain will load, and normally what we do is that we pick the expiration date and we go for the analysis tab. And you probably remember I say all the time, without even thinking about it, right? Because with the analysis tab, we're gonna get to calculate the +1 standard deviation and the -1 standard deviation, and that's gonna give us a statistical range that we don't want to think about, so we can behave more mechanically instead of overlying our opinions on top of the market data that is presented to us. Okay, so let the computer do the math, because computers are more objective than humans because they have no emotions, right? So that's why I always say without even thinking about it. But before we get there, okay, for the ones of you that are experienced with the sessions, you are thinking, Jose, didn't you forgot something? And of course, here is Yahoo Finance. And the one thing you want to do is to type the symbol Expedia here in finance.yahoo.com/calendar/earnings. That way, we're going to get to see the next date for earnings for Expedia, which happens to be February 5. This is an important and very relevant piece of information, because by knowing that data, knowing that today is January 7, and knowing that earnings would be located on February 5, that tells us that we can use any Friday expiration starting from Friday 10, going to Friday 17, 24, 31. Okay, all those Friday would be valid. Friday 7 would not be valid because you have earnings risk. And you can see that here, by the way, with the implied volatility, you can see 41% compared to 23, 25, 26, 38. So 41% happens to be February 7. So there is more premium, but there is plenty of risk built in February 7. So we're going to have to avoid that one. And actually, the shorter the time to expiration, the better. So we'll start with January 10, which I would say probably is not going to work. It's too short. 3 days to expiration is very little premium, but we'll start there. So now that's when I say, without even thinking about it, you go ahead to analyze and sell, and you add an Aaron Condor to the simulation. That will fall into your analysis tab. Notice the date, January 10, January 10, January 10. So then with the plus and the minus 1 standard deviation that I set up earlier, as you saw me do it. So now mathematics and Option Station Pro automatically tells us that the statistical range will be located between 105.60 to, let's call it, 112. That would be the statistical range from now until the end of the week. So without even thinking about it, let's draw a line at 112, okay, and let's draw a line at 105 something. Okay, 105.6, I believe it was, right? 105.6, something like that, okay? And if that was to be the case, let me see, what's the data? 105.60, okay? 105.60, okay? So 60 is below that UFO, okay? So it's somewhere there, right below that UFO. That UFO has the bottom part located at 66, so 60 is obviously below. And basically, by looking at that setup, you now know you will need to move your line to 99. And then if you were to do a vertical projection of where the current price is to that bottom line, right? And you were to project this to the top, okay? You were to project this to the top, well, we have a problem, right? Because that will bring price to be all the way around 118, okay? And that would be a great, nice range that is very symmetrical and everything else. But the problem is that if I look at, let's say, the monthly time frame of Expedia, we've not been trading at those prices, okay, until, let's say, October or August or something like that, okay, or maybe even July 17, okay? So since there is a peak here, I'm going to start with that one, which is July 19, okay? And what I'm going to do is go back to the 55-minute time frame, but I want to load data until July, so I'm going to type 7, 2019, okay? And that way, now I can move this down a little bit to see if there is any remaining UFO at that price. And you can see there is no UFO on the left, okay? There was price data there. You can see a candle there, but there was no UFO at that price, okay? So again, going back to the monthly time frame, well, it's obvious that if July 19, which is that peak, did not provide any UFO in the 55-minute time frame, so it looks like we need to go back in time all the way to July 17, and therefore we're gonna do that now. By the market is closed, so I'm not gonna be concerned about too much computing power, because 2017, that's gonna be many candles to be loaded, okay? But the market is closed now, so it's fine. I can do it without getting my TradeStation in any type of trouble because loading too much data. So PD here on the upper left means pending data, which is the data that is being loaded as we speak. And once we have it, then I will scroll down. I have it now. And hopefully some UFO will show up. And oh, look at that. The next UFO is located all the way up there at 136. Okay. So in other words, we're going to forget about this trade because even though we do have a UFO and everything else, well, let's face it. If I was to sell the 136, okay, I'll show it to you at the speed of the light just so you know what I mean. So if I was to go to the further expiration date, which is January 31st, remember we said we are not allowed to use February 7 because of the earnings date. So if I was to look at 31st of January and I was to look at the 136, which is not even in the list, I would need to load more strikes, but still the 123 already is only paying me 8 cents. So in other words, the 136 is going to pay me, if I'm lucky, 1 cent. So again, it's a waste of time. And again, that's just a fact, that a situation that happens when UFOs are too far from the current price. Okay, so we love Expedia, we love the setup, we love the UFO, we love everything, but we are not given what we need. So what do? We go for the next symbol, which in this case is going to be HON, which I am loading as we speak. And also I will check the earnings date to see if we got what we need. Okay, so Honeywell got earnings on the 30, so I can use a few Fridays for this trade. We got a probability of 52. Careful there because the openings happen to be 1% higher, so 179 is actually past both of those UFOs. Okay, so the moment the market open, price will be trading above those UFOs, so careful because that means that those orders have been filled or canceled or both. So there is no unfilled orders, even though we have it on the screen. It's just that pre-market data is higher. So then what I'm going to do is look at pre-post market data to see what we have. Okay, and we do have some UFOs, but notice the stats: 47% instead of 52%. That is not valid, and therefore we are not gonna plan anything on Honeywell. Let me take a look at the monthly time frame. Yeah, we are about to make all times high as well, meaning that not only we don't have UFOs above, it doesn't matter how much data I load, that chart will never reveal red UFOs because there are none. Okay, so then I'm just gonna move to IBM. That one was easy. And again, check earnings for IBM as well. So earnings on IBM happen to be January 22nd. Okay, so we still have a little bit of time to go. 46% when using regular session with pre and post market. That would become 50%. So that's good. We like that. We do have UFOs above. We do have UFOs below. That is good too. And therefore, this is when I say, without even thinking about it, okay, we're just going to load IBM. Okay, pick the next expiration date. And again, without even thinking about it, right click to analyze and sell an Iron Condor. We will change those price points to be 1 star deviation positive, 1 star deviation negative, and that would create a statistical range from 131 point something to 136 point something. So coming back to the chart, 131, 136. So 136 something is there, 131 something is there. Okay, and what we need to do is we need to find UFOs above and below those lines. So again, I'm just gonna go back to the monthly time frame just to know if I need to load more data. So we have data below price and above price. If I start from, let's say, July 18. Okay, so July 18. Okay, just added a B here. So July 18. Okay, so first date July 2018. Okay, and by doing that, if I scroll up, I should be able to uncover green UFOs. They happen to be quite far down. That's gonna make it a little complicated, okay? Because earnings, this is a kind of like the similar situation we saw earlier with Expedia, but kind of backwards. With Expedia, the next red UFO was very far up. In this case, we're talking about the green UFO is very far down, okay? So kind of the same but backwards, okay? So January 22nd is the last expiration day we can use. So let me do this. January 22nd, that means that the most we could use is January 17 because 24 is too far. And if I go back to the chart, The next green UFO is located at 121.4. I don't think we're going to have premium enough. Let's check quickly. 121, that would be 120. That is paying you 6 cents. Remember, we have a minimum requirement. I'm just loading the notes. We have a minimum requirement of, where are you? I want to show you. Here we go. Our minimum requirement is 35 cents. There are cases where we accept 25, but 35 cents is the minimum. In this case, we are being paid 6 cents, which is obviously less than 35. So it's not valid. And the reason why it's not valid is because that UFO happens to be too far. And it's just where it happens to be. So we gotta be mechanical, objective, and accepting in this case to adapt to what the market is giving us instead of decide, you know what, I'm gonna sell the 128. Well, the 128 you could certainly sell it, and brokers would be happy to charge you commission for that. But there is no UFO at this price, therefore your probability would be very, very much less, or I would even say very, very weak. Okay, even though there is distance, okay, there is no unfilled orders. Okay, so probability drops dramatically in that situation. Okay, so where are we at? Well, we just reached 9:20 New York time. And what does that mean? We are now 10 minutes to go before the market opens. And what does that mean? That means that the options chain resets. So if I was to load any other symbol, okay, let me do it so you see. So if I load Apple, for example, okay, with most brokers, now everything is going to be zeroed out. You see? A few minutes ago, it was not like that. But the moment you reach 9:20, it's like that. In other words, I cannot work with options data now. Okay. Well, actually, it's not zeroed out. I still got data here. Surprisingly, let me see. Normally 9:20. Okay, now. Okay, so it took 9:21. So it's zeroed out. Oh, look at that. Some data is coming in. Interesting. So maybe they have changed a process in the backend of TradeStation in this case, which is actually quite nice. Normally that's not the case. So, you know what? So being this the case, let's keep going, because I was going to switch from non-directional to directional trading. I'm not sure about this, but it looks like maybe TradeStation has done some upgrade or enhancement of their servers or something like that, and they are now providing market data where before it was not the case. So what do we have? MMM, that's the next stock in the list, which is more than $100 per share. So I'm just going to type 3M. Maria, so you're going to be moving to Madrid. You visited Valencia in 2019 and you loved it, but I have family in Madrid. Got it. I understand. Well, I guess you are mentioning Valencia because you probably know that I am originally from here, from Valencia, right? Madrid it's really lovely. It's indeed one of my favorite cities in the country. So flavorful with what being Spanish means at all levels. But anyway, so January 27 is the earnings date for 3M. So certainly we do have 20 days to expiration, so we can play with this a little bit. Now, not happy to see 46% performance stat with pre and post market. So let's see if we got an improvement with the regular session, and we don't. Okay, it becomes 45, and therefore that stock would not be acceptable. You could see clearly that there is no institutional interest in that particular stock. Institutions are not keeping their orders unless they get filled immediately. Okay, so there is no institutional interest. If they don't get filled, they take their money and they go invest somewhere else. So there is not so much institutional interest. Therefore, if the large market players are not interested, should we be? Well, of course not. We do not have the power to move the market ourselves. So therefore, as we always say, we need to be adaptable. This is how we succeed in trading. Okay, guys. So 1 second, I'm loading another stock here. Here we go. So we got UPS, 46%. That is also a statistic that is not relevant enough. What about pre and post market? Pre and post market is giving us 45%. So same problem with UPS and MMM. There is no institutional interest. Okay, so we are gonna pass on that. And now the last stock in the list, which is above $100 per share, is Yum Brands, giving us 45% performance stat with pre and post market, when switching to regular session, that becomes 55. This is certainly nice, okay? But again, problem, look at the vertical distance from the current price to finding two red UFOs above price. You would need to be selling 118 when the current price of the stock is 101. Let me tell you that I could be wrong, but I'm going to pass on this one because we are about to waste our time looking at the option chain just to realize there is no premium enough, okay? Very good. Good to see you, Sonny. GWAG, to enable pre and post market data, what you would do, it's either you set it up the way I have it here with sessions on the top, okay? You know, your menus on TradeStation can be, you can customize all your menus here, as you can see when you click on the right, okay? And you can just play with it, okay, until you make it exactly how you like. And if you don't like to have it the way I have it with the sessions button here, what you could do is very simple, okay? You just double click on the chart, double click on the candles, and here when it shows properties, okay, you can change the session from regular session to any other session that you may have in your list, okay? It takes multiple clicks to do that, so I personally prefer to get my session menu here on the top because then it's very convenient. All of this, of course, is personal preference, okay? That's how I do it. I meant in case the option is disabled. Oh, for the option chain, typically what would happen is that the option chain would be zeroed out before the market opens, the 10 minutes before the market opens. That's what used to happen all the time. I'm actually quite surprised it's not the case today. And you could not do anything about it. It's not like there is a switch to enable or disable. You just have to wait until the market opens, okay? It seems that, okay, let me try again with a different symbol because I've never seen it before. So McDonald's, let's see if with McDonald's we got options data. Well, now it's all zeroed out. So maybe, well, actually it's not. We have data. So I guess that there have been an upgrade that was not the case before. And now we do have options data all the way until before the market opens. Okay, so it's a great news. And it's certainly a new feature that was not available before. Or if it was available since some time ago, I did not notice because it's always been the other way around. Okay. Cool. Okay, so let's continue. We completed our list here looking at the stocks which are $100 or more. So now I'm going to re-go through the list, okay, or go again through the list. And I'm going to look at stocks which are, of course, less than $100. I'll start with CSX to see if we can find proper setups for our trades, okay? So what do we have here? 53%, that's certainly good. We got two UFOs above, we got two UFOs below. That is certainly valid. What about pre and post market? 45%. So certainly for that stock, we should be looking at regular session data, okay? Now, I am uncomfortable here, so I'm going to skip it, okay? And here's why. If you calculate the vertical distance from here to this UFO, remember, we need at least two UFOs to defend ourselves when we do non-directional trades. And if you were to project this price action to the top, we are way past the red UFO. Okay, so in other words, we are not in the middle of the range. We don't need to be exactly in the middle, but in this case, we are just a little too high. And also, with the side of my eye, I was kind of watching as well the fact that that stock is likely going to open 0.04% higher. So not only we are not close to the range, we are actually likely going to open higher. Okay, and therefore, that's not going to work well. Okay. Yeah, simulated or not, you will get a real market data GWAG. Okay, so that will not make any difference. Okay, so let's continue. So AEM, what do we have? What do we have? Okay, so pending data, so it's downloading here. We're just gonna wait. Here we go, 49%, that's okay. What about if we do pre and post market? 36%, that's not good. So we're gonna go back to regular session. Now I only see one UFO above. Okay, so the question, of course, especially where we are at, it's am I making all times high? No, we are not making all times high. There is data, there is market data here coming from 2011. Okay, so I'm just gonna very quickly load that market data coming from January 2011. Okay, and it's gonna take a while for this to be downloaded. Okay, so what I'm gonna do, I started downloading it. You can see PD pending data, little trick. You go to messages, download scheduler, and you can see the download is right there taking place, and it's going to take a while because that's many years of data, so it's going to take a while. So what I'm going to do in the meantime, okay, I'm just going to go back to other stocks such as Colgate Palmolive, and I'll go back to the other one later on. Okay, so back to the 55-minute time frame for CL, we got 54%. I got UFOs above. Okay, that's nice. Very far away though. So let me see if I can have pre-post market data. 54 becomes what, 48. Okay, in both cases really we are talking about $74, so that's really far out, and I doubt I'm gonna get premium enough. So I'm just using a little bit of my experience. You can do the exercise yourself to develop that experience, actually, to go check the price of the options at that level, and you will probably see that just because of vertical distance, we are not getting premium enough. Okay, so, and if that's not the case, it'd be great if you guys can type it on the chat box. uh, yeah, so anyway, so keep going here. So GILD, let me see that one. So with GILD, we got UFOs above, UFOs below, same story. The red UFO, the second, is very far out. We got 53%. What about if we do pre-post market? 51%. Do we have any other UFO? No, until we go so far out. Okay, so yeah, so unfortunately, um, kind of like copy paste type of setups. Okay. Okay. So, wow, that's interesting. KSS, Coles Corporation, same story. We have the 50%, but notice how the second red UFO is so far out. So we're gonna look at pre-post market. Oh, pre-post market, it's okay with 48%, which is acceptable. And we got two UFOs, so that's good. And then below we got two UFOs, so that's good. And let me do this. Okay, let me reset the scaling. Here we go. So we got two UFOs above, two UFOs below, two UFOs above, two UFOs below. So what about the vertical distance? Are we? No, we are not. Yeah, I'm just noticing that if you were to look at the vertical distance from the current price to the second UFO and the vertical distance to the above UFO, we are, the second, we are passing, by far the upper UFO, and therefore that would not be a valid setup as well. Okay. Okay. Well, our job as a trader is to say no more often than when we say yes. Okay. We always talk about that very important concept. This is how we stack probability in our favor. So we just keep going. 47.89, that's not good. So what about regular session for Southwest Airlines? That is much better with 53%. That is much, much, much better. Okay. Now, problem that I can feel is that, again, from 54 to 58, we're talking about, or 57, we're talking about $3. There's a little more volatility built in that stock. Maybe we are lucky with premium. To be honest, I don't think so, but let's take a look. So January 23 is the next earnings. So with LUV, we would need to use January 17, okay, because 24 is after earnings, okay? So we need to use 17. And if we sell the 54 and a half or 55, well, you know what? We are getting the 35 cents we need. So we may have a setup here. Oh yeah, I didn't do the math right. It's actually is the 57 what we need to sell, not the 55. Yeah, and the 57 is only paying 8. Okay, I was kind of surprised, happily surprised, but yeah, I didn't do it right. So let's keep going. WBA, Walgreens Boot Alliance. Let's see what we have there. 48% UFOs above and below. Too close to the one above and far from the one below. What about regular session? Yeah, that's what we have. Yeah, with both cases. Okay, so yeah, so the only one left for me to check is AEM. Remember, we were loading data all the way from January 11, and again, that's too much data to run while the market is open with AutoUFOs, because given the architecture of TradeStation, we may imply too much computer power to be able to run this properly. So what I'm going to do is disable auto UFOs. This is how you deal with situations like that. Disable auto UFOs. Step 1. Step 2, load the data you need from January 1st, 2011. Okay. Once the data is here, because we loaded it before, so it took no time to have it, then you will want to use the offline command. So you type dot OFFL and you click working offline. That's going to disconnect TradeStation. So the moment you disconnect TradeStation now, you will be able to activate Auto UFO and be able to run stats for your UFOs, okay? And see everything coming all the way from 2011, okay? So I'm gonna put a few lines there. So we have a UFO at this price. We have a UFO at this price as well. Those will be the two UFOs above. And below, this is 1 and 2. Okay, this is 1 and 2. And I mean, the ones below, really, I don't need to, because we see them. They're produced in not so long ago on the chart. They are produced here in 2019, so we don't need to. Okay, so now that I got the UFOs on top I need, what I'm going to do is I'm going to go back to my normal setting, which is to use 1597 bars. This will not overload TradeStation. Of course, my UFOs are gone, but I don't care because I got my lines. And therefore now I'm back to using the command ONL for online. So I'm gonna click on working online. I'm gonna be prompted to type my password again, and I will. And that way I will be reconnected with the TradeStation network. Okay, guys, and I'm gonna have to ask you just for one. Okay, everyone, I am back. Sorry for that. I had to disconnect myself just for a second. So anyway, so let's continue here. Okay, so we have AEM. We are not aware of where the location of the UFOs are. Let's take a look at the earnings date, AEM. So we know. Okay. So no data for AEM. Why is that? Okay, so I don't have data for AEM, so I'm gonna ask for a little bit of teamwork here. I know a collection of you, for example, I'm thinking of you, Dirk. You are using platforms such as Thinkorswim. If we could do a little bit of teamwork, it'd be nice. If you guys could share with me what does it show in that other platform that the earnings date is for AEM, that would be great. Remember, Yahoo Finance is a free website, and therefore sometimes we got missing data. Like I have today. Which, by the way, if this ever happens to you and you don't have another source of data, it's okay. Just don't take the trade and that's it. Go find another trade. It's that simple. But at the same time, since we are all together, I guess that we can check, with other sources of information. So GWAC, it shows on your end February 13. Okay, very good. Anyone else? It'd be great if you guys could. I'm just a little skeptical. Just that since it doesn't show on Yahoo Finance, I think it'd be healthy to get that information from different sources. Okay, Dirk, also you are showing the information as February 13. So I get that. We do have the same date from both of you. Thanks a lot, by the way. And I think that we can call this information as accurate since we have this confirmation. And therefore, even though I don't have it on my end, thanks to you guys, we'll continue looking for planning this trade together. Okay, so what do we have here? So we have AEM. Okay, we have expiration dates which are actually since the date is February 13 and that stock does not have weeklies, only monthly expiration date, so then we cannot use February 21 because that's after February 13. So really we only have one option, which is to use September sorry, let me rephrase that. I don't know why I said September. 17th of January, that would be the expiration date to be used, okay? Also, yeah, really bad news here. We got $5 strike price increments. Yeah, so that's not going to work. The 65 is paying 18 cents, 19 cents. So, yeah, disappointing AEM. We don't have the diversity with the strikes that we need to plan on a proper non-directional trade. Okay, so anyway, so we'll do a little bit of cleaning. I'm going to clean my lines here. Goodbye lines. And therefore, now I'm going to switch mode. I'm going to do two things. First, I'm going to rerun. So click run. So I am rerunning the non-directional scan. Okay. Just in case new opportunities arise. You probably remember I showed you in the past that new opportunities would show with blue color. So later coming back to the list would be very, very simple, because then we will only focus on the blue color symbols, since we went through the whole list and we didn't see any setup meeting our rules. So then now I'm going to move to the world of directional trading, where I got 3 symbols to go long and 3 symbols to go short. So we're going to analyze those stocks, plan the trades if they were to meet our rules, and then go back to the non-directional trades because the scanner is running behind the scenes. Okay, so let's go for it. And by the way, GWAC, you were asking about how to combine the scanner and the auto climate. So here's what I'm going to do. So the first thing I'm doing is click on the symbol. Okay, click on the symbol, and really I should have started with win. Okay, it's much more liquid and higher price stock. So let's begin with win. Okay, and the first thing I'm going to look at is here, precisely, I'm going to look at the climate. Okay, and the climate is telling me that we are now dealing with candle number 17 out of statistical climates to the upside that should last for 5 candles. In other words, this market is way, way, way overstretched. It would be much healthier to wait for a much more serious pause or correction or something like that in the market, and to restart a new climate either to the upside or the downside, and bet on a new climate to continue developing in whatever direction that is. Because right now, as we speak, that climate is way too stretched. Could it stretch more? Of course. Is it likely based on statistics? Absolutely not. And that's mechanical, objective type of information. So we should act accordingly instead of convincing ourselves that for whatever magic reason we believe is going to keep going. So which it could, but again, statistics suggest the opposite is true. So we're gonna pass and win. And that's how you would use AutoClimate. Okay, AutoClimate in this case is invalidating the trade. So we just go now for the next one, Nutanix, okay, which in this case it's a valid one from a climate point of view. We got 3 candles out of 5.44. Okay, 3 out of 5.44 means that we are in the middle of the climate propagation, if you wish, and therefore we are not late to the party. And if we find a good entry, it would absolutely be a smart move to take it. Okay, now for this to be true, we have a few requirements. First, we need statistics to be 50% or more. Right now it's 47, so that's not good with regular session. Many times we fix it by switching to pre-post market. Okay, assuming the institutional interest happens to be more intense pre and post market. So let's take a look for that stock. And in the case of that stock, it's actually the opposite. 45% is less than 47, and 47 is less than 50. So there is not enough institutional interest in that stock for us to have a high probability trade. And even though you could certainly enter and actually profit, especially given the fact that stocks are fragile, right? They are depending on sectors, markets, competitor stocks, etc., etc. So certainly you can find or you can see this trade to continue. But again, when it comes to adding precision to your entry, probably it will not be possible. Okay, so therefore we go for the next one, which is ITCI, and here talking about stretched markets or expanded climates, where 27 candles, as you can see here on the bottom left, out of climates that statistically should last by 4.83. This is certainly an anomaly, a big one. Okay, and because it's so big, you may say it's not an anomaly, but maybe it's a major change of direction for that stock, a major change of institutional interest, a major change of something. But again, all of these would be guesses. We don't have statistical evidence that this is the case yet, and therefore we're going to pass on this one. Okay, and what I'm going to do, like I did for non-directional trades, since we went through these 3 symbols and none of those met our rules, I'm going to rerun the scan while I look at the directional short opportunities and see if we find anything that could be executed. And if not, later on I'll go recheck non-directional and directional long as well. So let's begin with TFC. So what do we have here? Good. So we have a climate with two thick dots. Okay, so climate is confirmed to the downside, 2 candles out of 4. So certainly it is the right time for us to enter this particular trade, as long as the other rules are met. Okay, so the other rules will be met or not met in the main chart here. And for now, it's looking quite good to see that performance stats are 58%. This is actually a lot of institutional interest. Okay, it's actually a very, very high statistics for stocks. If it was futures or forex, it would be, let's call it normal, or maybe a little below normal, but for stocks is very high. So lots of institutional interest. In any case, I'm going to check pre and post market too. 46%. So the interest rate, the institutional interest rate, let me say that again. The institutional interest pre and post market is not as good as during the regular session data for that stock, and therefore that will be our main objective. Okay. Now the bad news though, okay, and it's just what it is. So we're gonna have to take it. Is that our ideal entry points would be around 56, which is the price of the average, as you can see here on the daily time frame, right? 56.06. We don't need to be that precise because stocks are fragile. We just talked about it. So as long as we had a UFO somewhere around this area, 56 or 56 something, we'd be more than happy to take the trade. But unfortunately, there is no red UFO. So we have the climate, but we don't have the on-field orders. In other words, we have no trade. Okay, so we go for the next one, GIS. Which is a $52 stock. So we start with the climate, 3 out of 4. That is certainly a valid approach to this trade. So let's go ahead and take a look at the performance once PD disappears and all the data, all the pending data has been downloaded. Oh, GWAC, I understand. Your question was the auto climate for the red screen. Okay. Well, we normally use that for intraday trading, not for the longer term, because for intraday trading, normally you are dealing with only a few symbols. Where for the longer term, you got 9,000 stocks in the US market. So I personally prefer to use the scanner the way I am doing today. Now, if you happen to trade a limited watch list of stocks, let's say you trade 30 stocks, let's say you trade 50 stocks, you could certainly do the same thing I do in the short-term sessions with auto climate for your watch list if it's a limited amount. If your watch list was to be so broad, then again, as I just said, I think it would make more sense to use the scanner because you get a shorter list and it's, in my mind, more convenient. Okay, but that's again personal preference, so I will let you decide what you like best. Okay, got it. Good question. Sorry for the misunderstanding. So GIS, okay. We talked about the climate is fine. Probabilities, again, lots of institutional interest, 57%. That's nice. When we look at pre and post market, we can see 53, which is very nice too. So there is institutional interest in both regular and pre and post market. Of course, we're going to go for the greatest value, which is 57. And all of this is good. And now we look at the average, which is 52.51%, and that falls somewhere around here. And unfortunately, we have the same situation. Okay, unfortunately, we have the same situation where there is no UFO here. The UFO is located a little higher. Okay, and therefore, we do not have a UFO overlapping the average the way we want. It's okay for us to be flexible with stocks. It doesn't need to be precise or perfect. But really, we are talking about 50 to 50. It's kind of like half of a day move higher. That's where we find the UFO, and that if you're with me, it would mean that UFO is just a little too far out. Okay, so we're gonna pass on that one, and then the last one here would be BZUN, which is a stock that just created a 1 dot for the confirmed climate. So 1 out of 5, certainly a good time to enter. 48%, that is not acceptable for directional trades. We want a minimum of 50. So let's check pre-post market. That's 39. Not enough institutional interest to get directional. And therefore, I'm going to do the same thing I did before. Click run and then go back to non-directional. Okay. No blue color symbol. Okay, no blue color symbol. So then I'm gonna have to look at directional long. Okay, I got just a little bit time left here. So I'm gonna have to look at directional long to see if there is any other opportunity, because non-directional, there is none. Okay. So anyway, in the meantime, while I'm waiting for this to happen, let's take a look at the S&P. Let's take a look at the VIX as well, just to see what's going on out there. So the S&P dropping by 0.36% today. Again, many people, and sure it is, we're at the beginning of the year, and many times lots of on-field orders are added, or lots of on-field orders are taken away from the market, and therefore, you may see a lot of speed of movement either to the upside or to the downside, and and that could be the case. And certainly on the news, where normally there is a little bit of how do I put it, an attention-seeking type of way on how to report when reporters talks about the market. So you may talk about the reporters when the market falls to talk about that's it, that's going to be the year when the market collapses and so on. And this could certainly be a possibility. Certainly, fundamentals are not the strongest in the world, isn't it? And now we even have international conflicts, such as what's happening in the Middle East, etc., etc. So, I mean, craziness could happen, and many on-fielders could be cancelled. But look at how many UFOs we got below price. So it would be quite shocking, and I'm not saying it could not happen, but it would be quite shocking to see price just fall through all of these without reacting to any of these. It would be, very, very difficult for this to happen. Okay, so in other words, that's the market in which we have, and this probably also translates. Let's take a look at the VIX. Okay, when we look at the VIX, which represents the implied volatility of options. Okay, here we go. So you can see how, even though I guess you agree with me that what's happening in the Middle East, for example, the world is a little crazier since the year started compared to 1 month ago, for example. Again, that depends on views. I'm being very simplistic with that statement, but really the VIX is more or less where it was like a month ago. So not a major change. Okay, so basically, large market participants are not seeing too many differences. Okay, and therefore, from a directional point of view, okay, you can see here TIF just showed up. Okay, and certainly it would make sense, as long as that stock meets the rules. Okay, to look into planning on a trade, as long, again, as I said, we are meeting the rules. Okay, and really we are not meeting the rules as we speak. Okay, actually the scanner here is using end of day data. So the scanner here thought that TIF would start with an up climate, but actually if you look down, actually it's a down on confirmed climate, because it's a thin dot which is a red color. So basically, long story short, we are not touching Tiffany's, and we are gonna go check the non-directional shorts to see if something still loading here. So we'll let it process. Non-directional, we already said, nothing to do today with non-directional trades. So I would also like to look at the directional ones from a neutral point of view. So neutral long, neutral short. I didn't mean to say purely directional, but neutral long, neutral short. And those are also opportunities that we could explore. Okay, so IEF, I'll skip it, it's an ETF. MMM, what do we have about MMM? So what was the stats? I think MMM was not giving us the 50%, so nothing. XOM, that one may be interesting to observe, especially with everything happening, or what people think is going to happen with the price of crude oil, precisely with a conflict in the Middle East. So what do we have here? 61%, very strong performance stats, pre and post market, regular session, 52%. So certainly pre and post market, it's really where the key information is on that stock. We need to find UFOs below price. So maybe I'm going to load data all the way to October 19. Oh, actually, all of this is October 19. Okay, this is October 19. So I need to load data prior to that. And this would be down here, which is December 18. December 18. Okay, so December 18th, what do we have? There is no UFOs below. Yeah. So yeah, very nice stats, but no UFOs below to do a neutral non-directional trade. And the reason why I'm saying that is because we are looking for two UFOs, not only one. Okay, and in this case there is only one. So I mean you can still do it, but probably it is less. Okay, so we're not going to do it. So what else are we looking for here? Yum. So regular session, only one here, 55%. That's nice. We will need to move all the way to somewhere around January 19, something like that, to see if we got enough UFOs. So I'm just gonna go for January 19. Oh, you know what? December 18 is fine. And we do have multiple UFOs. Okay, so now let's see what we can do here, because maybe we are gonna be able to sell options below this UFO. Let's see how much we get paid for the 95 strike if we were to do YUM, a YUM credit spread. Okay, so here's the YUM option chain. Let's look at the earnings date for YUM. Of course, never forget that one. That is February 5, so we can use all the way to January 31. Okay, and if we sell the 95, that's 8 cents. That's not enough. With January 17, what about January 24? January 24, the 95 would pay 16, getting better, but not there yet. What about end of the month, January 31st? That is paying 26, which is not enough. We need a minimum of 35. So, yeah, not enough premium. And therefore, we go for the next one. Okay. So, again, we're having a little bit of a challenge here, as you can see, as we are arriving to the top of the hour. Most of the stocks available here are not providing us with enough premium to do credit spreads or iron condors, get paid decently for the risk assumed in the trade. Okay, and yesterday, if you were in the session yesterday, I was talking about, I'm so eager to begin the year with you guys. I'm excited to find a few trades, execute them together, and of course, we're excited and everything. But if the market data you are receiving, the application of your method and your rules is not returning what we would call a valid opportunity that meets the rules, then you just need to pass. And that's very, very simple to be said. But when you do this by yourself on your own, you may have this major temptation at times to still execute the trade. Okay, so make sure you get those emotions under control when you do this by yourself. Like today, obviously, especially when we do the sessions, I'm always not only excited as your trainer or coach or guide, but also very eager to identify trading setups, because this is how I'm going to help you the most. Okay, help you help your accounts in one hand, but also help you from the skill point of view, pointing at the proper setups, giving you the opportunities to practice those executions and help you develop yourself. So if that doesn't happen, to be honest, I don't feel that good because I cannot help you that much. But at the same time, we gotta keep cool. That's what it is. This is like fishing. You drive your boat in the middle of the sea, you throw the net. Sometimes you then pull the net later on and you got plenty of fish. Sometimes you got less fish. Sometimes you may have no fish at all. And it doesn't make sense to blame the sea, because the sea doesn't owe us anything, right? So let's keep it cool. Let's relax. I know we all have a very strong passion for trading, but we need to keep that under control. Okay, and I'm mentioning this because this is a typical mistake that especially newer traders, and I know some of you are getting into the market since not so long ago, so I want to avoid mistakes on your end. So those are classical mistakes that come from a very good place, which is a great intention of putting time, effort, and practice into what you do. But next thing you know, those mistakes cost you money, and I want to avoid you those problems. Okay, so keep that in mind. Our job is to say no more often than yes. Okay, and this is something very important we all need to understand. Now, Dell here. Okay, if you measure the vertical distance from the current price to that UFO, and actually, Dell is 4 directional, right? Yes, I got confused here. Sorry for that. So what do we have with Dell? So yeah, we don't have a trade either because we have a climate that the scanner picked up as down. Remember, the scanner is using end of the data for some of the calculations, and with the intraday data that we have today, that climate went from red uh, at the open to blue with a thin dot, meaning that it seems that the climate is changing, but it's not confirmed yet. So in other words, we don't know, and therefore we're just gonna not do anything at this moment in time with Dell. Okay. So what else is left? Well, I'll have a quick look to non-directional short, and maybe Procter and Gamble will give us an opportunity. So let me see, 47%. That's not good. Pre-post market 50%. That is good. Okay, well, we may have something here. It depends on the earnings for PG. So PG earnings are on January 23. So we could certainly use January 17 for PG, isn't it? So let's take a look. PG January 17. We're going to look at the call side, right click to analyze and sell a vertical spread. Okay, so here I don't need two, I only need one. And the one I want to calculate is one standard deviation above, which tells me 126.23, 127. Okay, so 127 is all the way there. So I was thinking that maybe we could use that one. Yeah, let me try with the prior expiration date. With the prior expiration date, I'm pretty positive it will work from a stat point of view. But the question is, do we get paid enough? Okay, so if I sell the 126, I get paid 5 cents. Okay, so yeah, 126, I get paid 5 cents. Yeah, so that's not enough. Okay, so anyway, so long story short, lots of practice, lots of eagerness to execute trades in the beginning part of the year, but no rules are met. And therefore, today is one of those sessions where you gotta take it easy, and you could certainly, if you are a person who has a significant amount of time to trade, you can certainly wait. I would say after lunchtime in New York, a few more hours, 3-4 more hours, and then rerun the scans, and you may have new opportunities at a time. That's for sure. But if not, if you are a trader with limited time, then your job will be to come back tomorrow and do the same thing again. And I'm telling you, more often than not, as we all know, you will find opportunities. Okay, but today is one of those days where our job is the toughest of all, which is to sit on our hand. Maria, why did I skip the ETF? Well, yeah, good point. I didn't say it. I skipped the ETF. Yeah, Dirk, thanks for that. Not the best feel, isn't it? But that's what it is. So, Maria, the reason why I skipped the ETF is because, by definition, ETFs are a safer vehicle. They are instruments that are not likely to go bankrupt. They don't react to earnings the way stocks do, etc. And therefore, this is reflected in the options premium available. So for directional purposes, using ETFs is fine. But for credit strategies, meaning non-directional purposes or neutral purposes, normally you get paid very, very little unless something crazy is happening in the market. Or in that industry or something like that, normally you get paid very little. And it's almost always a waste of time to do the whole exercise just to realize I got little premium. And by the way, today, we've seen the VIX is quite low, premiums are low across the board. Even with the stocks that were picked up by the scanner as higher prices for options, we never got a setup that was paying enough. Sure, it is that the setups that were likely going to pay happen to have UFOs located very far up. Remember the Expedia where the UFOs were so far up, and the other stock, I forgot which one now, that the UFOs were so far down. So when the UFOs are far, of course, you get paid little. But at the same time, the ones that got UFOs that were closer, they were not paying premium enough. So if instead of that, you're going to use an ETF, so again, probably it's the recipe to basically waste your time. Okay, so I'm okay with do the analysis and say no, because our job is to say no more often than we say yes. but just do it, just knowing that I got way higher chance to say no than saying yes, then I'm not up for that, and that's why. But I didn't explain it. You're right. So thanks for your question, Maria, and thanks everybody for joining me. I will see you again next week. I believe I didn't miss any of your questions, so I think we are good. Anyway, super pleasure to be here. We got the year formally introduced, isn't it? Yesterday we got our short term session. Uh, Today we got our long term session. So we did both of them, and now we're gonna just keep going into the whole 2020 with more and more sessions, and again, a very powerful year. I guess most of you are now back from any holiday time you may have. You have taken for yourself and your families, and everything is back to normal. So looking forward to push and exploit 2020 altogether. You guys take care. See you next week. Bye bye.